Hello, Ed Alasauskis of Secure Legacy Solutions. You have me driving here on the highway. I'm on my way to a client's house, and I thought I'd share a few thoughts with you. Today is January 21st, 2016. As I speak, the Dow Jones year-to-date has lost 1,800 points. Look at your quarterly statement for next month when it comes and see how happy you're going to be. Probably not. A lot of people are talking about, is this the beginning of a recession? Are we on our way to a bear market? It's tricky. We're in tricky times. As I stated in previous messages, we don't have a good economic foundation driving this market. I think what's happened in the past is the Fed purposely kept interest rates low, and they were sort of talking about raising them here lately, last month or so, and so far nothing. I would see though they're probably going to have to raise it eventually, but they kept the interest rates low, so the traditional savers who years and years ago we're getting 3, 4, 5% in CDs and even money market savings accounts are seeing 0.03. And weren't a lot of options, so it almost like they were forcing the investor to look at the market to help prop up their Wall Street buddies. Now, as I've always said, nothing wrong with having some investment in the market. I think the main thing is if you keep track of it on your own, if you do some studying and know what you're invested in, it's getting a lot more difficult to just blindly trust a stockbroker. Nothing wrong with the profession at all, but if you don't know what you're invested in and have no idea how it works or how your broker is picking the stocks, it's sort of like going in the casino and going to the high-stakes poker table and laying a whole bunch of money down, but the only problem is you've never played poker in your life. Good luck in that situation. Now, if you studied poker, played it, and went to the table, no chance, guarantee you're going to win, but you're going to have a lot more sporting chance. The stock market works the same way, in my opinion, what I've seen over the years. Yes, people have made a lot of money in the stock market over the years, and it's grown, and that's always what they tell you, give it time and so forth. We're in a much different economic situation, and especially as you're getting older, if you're getting into your late 50s and into your 60s, and especially in your 70s, you don't have the time and patience to get through these events. Just think of it this way. If you lose 40% in the stock market, you're going to have to make up 60% just to break even. The last downfall we had, the big one in 2008, after 5 or 6 years, people said, hey, I made my money back. It took them 5 or 6 years, and all along the way, there was no guarantee of it. So I don't see a lot of positivity this year. So what do you do? And as I mentioned in previous messages, a flight of safety now is probably a very smart and prudent thing to think about. Something that will guarantee you some returns. They may not be the glamorous stock market 20 or 30% returns that they're going to be touting out there. But if you just want steady return with no risk and no sense of loss, and if you're retiring, the potential for annual income, monthly income for the rest of your life, sort of like a pension, give me a call here at Secure Legacy Solutions or message me, and I will be glad to discuss some safe, non-risky alternatives with you. I thank you for your time, and God bless you. Stay safe on the road, and stay safe out there in the market, and don't get hurt. Thank you.